Dear viewers, welcome to yet another edition of Expert Speaks. This is part 2 of Fractional Real Estate. In part 1, on last Tuesday, you heard Mr. Nihar Shah talking about the basics of fractional real estate. In part 2 today, he is going to talk about the specific aspects, how it becomes very attractive, how the nitty-gritties will work out. The startup, the company for which he works, which has more than 50% share of fractional real estate market in India, how it has designed things for you. You will find answers to all the doubts that could be there in your mind. You have raised lots of questions in the comment section. After hearing part 1, we'll try and address those questions as well in this episode. This is NRI Money Clinic for you, and I'm Dr. Chandra Kanwar, your financial guide for a happy living.
NRI Money Clinic. No hype, just the right advice.
Dear viewers, this is part 2 of series on fractional real estate. If you have not watched part 1, I will be giving a link to part 1 here in the card section as well as in the description box below. It's a good idea you watch part 1 as well to get a holistic picture of what fractional real estate is all about. To talk about this, the expert of the week is Mr. Nihar Shah. Mr. Nihar Shah is head of investments at Strata Fractional Real Estate. He is a management professional par excellence, more than 16 years of experience in various aspects of wealth management, fundraising, private equity. He has worked with companies like Gramal Capital, UTI Management, and HSBC Bank. Welcome again to the show, Mr. Nihar Shah.
Thank you, Mr. Bhatt. I think it's great to be associated with NRI Money Clinic, and we are happy to be on the Expert Speak with you again and answer all the questions which you might have.
Thank you, Nihar. Your episode last week has become a very popular episode on my channel. People liked it. People sent a lot of comments. They sent me lots of WhatsApp messages asking lots of doubts that are there in their mind. In fact, I am unable to reply to their messages. So many inquiries, so much of interest in this fractional real estate. And I have collated all the doubts that are there in their minds. And I'm asking the question. Don't worry about the time today because we are answering the queries that are there in the minds of our audience. And let's take them one by one. Somebody asked me, why do you think fractional real estate is a compelling case of investment for NRI community in particular? What do you have to say for that?
So as we speak, we're 2.5, 3 years old in the business with a total aim of more than $100 million. 32% of our investment comes from NRI investors. And that is a staggering number. And we ourselves were surprised to see the kind of belief we have and the support which we're receiving from NRI investors. There are multiple reasons why someone who's living abroad but has his roots in India should be investing into these kind of assets. Just to give you an example, there is more than 7,000 crore worth of real estate which is being bought in India year on year by NRIs alone. Why do they do that? They do that, one is to park their money in India. Second, obviously, if they have an income stream abroad and eventually you want to retire in India, you might want to build assets and create wealth in India as well. And third is as an investment option back in your country, which you've always wanted to, but you've never been able to do that. So looking at that, people are investing into real estate, but that is residential. Residential real estate gives you not more than 1.5 to 2% as a return on your investment. Over here, the asset class which we offer gives you anywhere between 8 to 9% as your rental yield. And on a IRR or a overall return basis, it gives you anywhere between 12 to 14 or rather 12 to 15% as well. It becomes very easy for NRIs to invest into these kind of assets because they are sitting at their home in anywhere in the country, anywhere in the world, and they will be able to access all the properties which we have to offer. Could be in Mumbai, could be in Bangalore, could be in Chennai, Pune, Hyderabad, Jaipur, depending on where they want to invest. And at the same time, they can see all the documents, all the paperwork, all the due diligence, the valuation report, everything which is done by Strata before you deploy even 1 rupee. So once you do your complete due diligence, you do your research, only then you need to invest. So by sitting in one place, you can diversify your investment across multiple locations and asset classes. Second is you can also invest, and after investing, you don't have to take the hassle of managing the asset or managing the tenant. Unlike you owning a physical asset over here in India, and you would say, okay, if I'm sitting so far away from India, how will my asset be? How is it being managed, cleaned, and all of that? So the day-to-day management also is taken care by us, and that is something which gives a lot of relief to our investors. Third is, a lot of investors want to own real estate and pass on to the next generation. But then when you do that, there are its own challenges. Your next generation might never want to travel to India, leave alone traveling and managing the asset. So here, by doing this, you are converting your actual real estate, physical real estate, into a financial investment through a paper investment, where you know that at any point of time, if you want to exit, you can do that. However, if you want to pass it on to your next generation, you can add their name as nominee, and automatically it gets passed on to them where the time comes. So that is also one of the major reasons why a lot of people are liking this investment option and investing into assets through the fractional investment. Fourth is, today, if you're sitting in any part of the world, cost of capital is very low as compared to what you have in India. Today in India, if you were to take a home loan or a property loan, you will get it at not less than 8%. But if you're in any other part of the world, you might get it at a much lower cost. So it makes a lot of sense for people to also take that loan at a lower cost and deploy that money in an asset which generates 8-9% kind of a return. So that is also one of the options. And last but not the least, as I said, you can diversify your investment across multiple assets and exit as and when you want. So these are some of the reasons why NRIs are loving to invest in these kind of grade A or institutional grade properties, where the tenants are also Fortune 100 or Fortune 500 companies in the world.
Nihar, that's an excellent explanation of why it's a compelling case for the NRIs to invest in Indian fractional real estate. It's a solution for many of the problems they were beset with investing in the Indian real estate. You have solved a most part of the problems faced by the NRI community. Dear viewers, I have a good news to share with you. We have partnered with Strata. Whenever they float a new property, the offer will come through NRI Money Clinic as well to you. If you have an intention to invest in fractional real estate, all that you have to do is send us a message on the number that is shown here on the screen, and as and when an offer is available to you, we will notify you of the next available opportunity. You can as well fill your details in the link which is given below, and NRI Money Clinic team or Strata team will get in touch with you whenever the next opportunity is available for you to invest. Nihar, I look forward to having a very fruitful relationship with you all and bring the benefits of this real estate investment to the large community of NRIs spread across the globe.
Absolutely, sir. So in fact, just to let you know, we have a representative office in Dubai as well, where a lot of our investors have visited that office and understood if they have any further doubts and questions. So we are happy to, be on board with you and solve all the queries, give all the best possible options for investment to investors on NRI Money Clinic as well.
Thank you, Nihar, for that word of assurance. Nihar, we'll take our discussion forward from here. One person asked me, why should I invest in a fractional real estate when I can own a commercial real estate myself? What are the advantages an investors can get by investing through fractional real estate than owning it directly themselves? Can you briefly answer this question?
Absolutely. In fact, this is a question which is very common when we speak to people and explain them why fractional investment is the best way to invest and own assets. And these are some points which I will talk about. Today, when you want to invest into a physical asset, the first thing which you require is a larger investment size. The assets which we acquire and which we offer to our investors, the minimum investment size is 25 lakhs, which is around $30,000. But when you want to go and invest and acquire that entire asset, you have to pay upwards of 30, 40, 50 crore INR rupees, which itself is a huge investment amount. However, even if you have that kind of money, you can diversify and invest into multiple assets on our platform. Otherwise, you would have been able to invest only into one single asset. So ownership of multiple assets as compared to ownership of single assets is a very important point, where you are reducing the risk and taking benefit of various asset classes, various tenant types, and at the same time, various geographies is something which is very important. Second, when you were to invest or when you want to invest into a direct property, you yourself will have to do a lot of due diligence on the legal side, technical side, and apart from that, also a lot of negotiation and regular conversation with the tenant and the property managers and all of that. Over here, we do not want you to do that. We take all the hassle, we take all the work from you. What we give you is an asset where due diligence has been done well in advance in terms of technical due diligence, financial due diligence of the tenant, legal due diligence of the property. The paperwork has been done and studied by the best lawyers, which otherwise you might not have appointed. So all of that is done to you, and then it's passed on to you through our platform. So that is the second reason why you should be looking at investing through fractional and not directly. Third important reason is that if you were to invest and own a single property, let's say if you've deployed and invested 5 crores or 10 crores in a property, and if you wish to get some liquidity out of it, you are not going to sell a part of that office. You will have to sell the entire office, or you will have to sell the entire warehouse and probably get that money out. While here, that is the beauty, that if you invest, let's say 5 crores across 5 assets, you can sell one asset and probably get that 1 crore and probably let the other 4 crores be invested and keep earning money on that. So liquidity also is one of the benefits why you should invest in fractional and not directly over there. Most important is that also when you're looking at investing into direct property, you will have to take the headache of finding a tenant once this tenant moves out, and day-to-day maintenance. Over here in Strata, we do all of that for you. We collect the rents, we pass on the rents to you, collect the GST, which is the tax, pay the GST on time, take care of insurance, take care of property tax, common area maintenance charges. All of that is done by us. And eventually, if the tenant was to move out, then we will take the responsibility of getting a replacement tenant as well for you. So these are some of the main reasons why you should not be investing into a physical asset and taking this alternate route of investment and diversify and invest across multiple assets with the same capital available to you.
I'm very sure the audience will make note of these points. They have moved away from single stocks into mutual funds. They have moved into PMS accounts. Likewise, the concept of fractional real estate is a sunrise industry at this point of time, and more people are getting attracted to it. I'm very sure in months and years ahead, it will gain more and more momentum as times pass by. India appears to be a very secular growth story. There is so much of a growth of real estate which is likely to happen. And in a world which is struggling to find where the growth is going to come from, where the yields are going to come from, probably, I will not hesitate to say here, fractional real estate would be one place which looks to be a very, very attractive investment opportunity for each and everyone who wants to invest in it. Nihar, let's get into the basics all over again and start. How do you function as a company? My first question to you is, how do you select a property for investment? What goes into selection of the property?
Great. So there are multiple checkpoints or multiple filtering criteria which we adhere to when we look at getting a property on board. The first and foremost is we do not get a property on board which does not have OC, which is the occupation certificate, which means that everything on the compliance bit from the government standpoint is clear and the building is made as per the approval which it had. So once the building has an OC, only then we can probably look at considering that building. Second, we do not take a property or an asset which does not have a tenant. We do not want to get into speculative business. Hence, we take a property only when there is an existing tenant or a tenant who's doing its fit out or furniture work and able to move in the next 1 to 2 to 3 months. In that case, the agreement to lease or the lease agreement has already been signed. We also do not take a property where the furniture and the fit out expenditure is to be done by the landlord. We prefer taking an asset where the furniture and fit out expenditure is done by the tenant, which means the skin in the game for the tenant is going to be significant and he will not move out of the property in the near future. We also do not take a property where the lock-in from the tenant is less than 2 years. We need a minimum 2 years of lock-in from the tenant. However, average lock-in on our entire portfolio is anywhere between 3 to 7 years, which means that the tenant who is in our property will not be able to move out of a property for at least 3 to 7 years. We also are very mindful of the rate at which we acquire the property and the rent which the tenant is paying. We will never be able to, or we will never rather acquire a property where the rentals are highest in the market. Just to give you an example, in Bangalore, let's say if in MG Road, the rentals are anywhere between 60 to 100 rupees, I will be interested, or we will be interested in buying a property which is anywhere between 60 to 70 and not at 100 to 110. Because the minute you buy a property where the tenant is paying higher end in the market, it is very easy for him in difficult times to move out of a property and go to another property at a reduced rent. So that is something which we are very mindful of. Also related to it is also, how do we acquire a property and how do we define the correct value of the property or the capital value at which the property is being acquired. So we again do a detailed and a thorough check to understand what is the ongoing rate in the market. We have access through one of our partners, we have access to actual registration documents of any sale and lease transactions in that particular building or that vicinity. So we know for a fact that if, let's say, 18,000 or 20,000 is the rate per square feet in a particular micro market, I will never be able to pay 22 or 24 or 25,000. But I will in all probabilities pay something which is at par or could be at a discount as well. Some of our properties which currently are available or also in the past are being offered at a discount to the market value, which in turn means more capital appreciation or more profit for our investors when we look at exiting the asset. We also focus a lot on who is the tenant and what is the business. Today, if the tenant is into a strong business, that gives us more assurance and that gives us more confidence that he's going to stick around for a longer time. So for example, one of our tenants is Capgemini, one of our tenants is Puma, one of our tenants is UBS, which is the Swiss bank. One of our tenants is Microplastic, a company which manufactures toys for Hamleys. One of our tenants is Wakefit, which manufactures mattresses, and many more. So we have 19 properties and all these tenants are into businesses which are doing very well, but at the same time, they're leaders of their businesses. One more aspect which we look at is whether this particular office is the back office or the headquarter of that particular company. In most of our assets, the tenant is holding the head office, could be the India head office or the Asia head office of that particular company and operations. So that also gives us more confidence. We also look at what is the vacancy. We do not go into a property which has more than 7 to 10% vacancy or the micro market which has a higher vacancy. So all these things are something which we consider before getting into any kind of agreement or getting into buying any of the asset. So that is on the due diligence part. But apart from that, what we also offer to you is all the paperwork, all the due diligence which we have seen, and you can probably go through that before taking an investment decision.
Thank you, Nihar. That's a lot of explanation, and that gives us the confidence that this is something which is worth pursuing an activity or an investment exercise. Once you identified this property and you have done your due diligence, how the fractional real estate is structured? How do you offer it to the investors? What's the exact process that will be followed?
Correct. So there are 3 stages involved in this. One is before the asset is purchased or pre-purchase, as we say. Second is when the asset is identified and on the fundraising stage or the interest stage. And third is once the asset is registered and the rents start. So initially, when Strata looks at acquiring an asset, out of 10 assets on an average, we say no to 7 to 8 assets. Only when it passes all the filtering criteria which we just spoke about, then it comes on our platform. We do right from the term sheet. There is a agreement which is also done with the seller, which is the sale agreement. There is a lease agreement. And apart from that, all the other due diligence which I spoke about, which is the legal, technical, financial, all of that is done and showcased to our investors before they take an investment decision. Once the asset is registered, and how does an asset get registered, or how does the client pay money and where does he pay money? A lot of people would have questions that, okay, if I have to deploy this money, who takes the money, how safe is my money, and all of that. So what we do is we create an escrow account. First of all, an SPV, which is private limited in nature, is created. That SPV is created to own this asset. So every asset is owned by a different company or a different SPV. Today, if you want to invest into a particular asset, you will transfer money through online transfer from your bank to the escrow account. And once the money is collected into an escrow account of the SPV, the company goes and register the asset in its own name, and share certificates and compulsory convertible debentures are issued to you as investors or shareholders of that company. Once the asset is registered, the rents are collected on a month-on-month basis by the SPV. Management fee to strata, which is 1%, is paid to strata, and balance gets passed on to investors. GST is also collected on a month-on-month basis from the tenant, and the GST is also paid as it has to be done on a regular month-on-month basis. So this is how the structuring is done, and this is how the ownership works for any investment in strata.
So the doubt which was there in the minds of the investors, when I pay the money, it goes to strata. Tomorrow, if strata something were to go wrong, my money is at risk. You are assuring the investor community that it will not go into the company account of strata. Rather, whether it is the money you send in for buying will go into an escrow account. Likewise, the rentals which gets collected will come into the accounts of the special purpose vehicle or SPV, and it is dispersed to the owners from there itself. There is no way mixing of funds that will happen with the company accounts of strata. Is my understanding correct or wrong?
Absolutely. So I'll say a couple of more points on this. So strata appoints a custodian and a trustee for every asset or in every investment, which means that every SPV is governed by a trustee, and all the papers of the documents are also safely kept with the custodian. So at no point of time does the money come into strata's hand, and nor does the property's ownership or right comes into strata's hand. So at any given point of time, the money and the investment is safe and is owned, or the investment or the property is owned by the SPV, and the shareholders of the SPV are the investors who are investing into this property. So it is ring fenced from that. Apart from that, there are the big four auditors who audit strata's book and the SPV's book on a regular basis. All these reports, all these income, insurance receipts, property tax receipts, CAM receipts, anything, any expenditure also which is done at the SPV level, the receipts of that is also showcased and uploaded on the investor dashboard for them to check on the investment and everything else on a regular basis as and when they want. So there is a dedicated investor dashboard which your investors get an access to. We also have an online, an application or a strata app, which is where you can invest and track your investments. So everything is transparent, everything is given to you before you invest, but at the same time, after investment, on a month-on-month basis or a day-to-day basis, you can check anything which you want to check.
Nihar, one investor asked me this question. I want to invest in fractional real estate. Should I first send in money, book my real estate, then I'll come to know who is my tenant, how much rent I'm going to get, where that property is going to be there? That's how the strata decides it, or everything is pre-known to him? His question basically comes from how transparent are you or how I know what I can choose, what I want to or not to invest if I don't want to. How does the system work with that question in mind?
Great. It's a very natural question for anyone to have, but I'm happy to share that today when someone invests through strata or on a platform, beforehand or before even investing 1 rupee, they have all the details as to where is that money being invested, who is the tenant, what is the rate at which the property is being bought, what is the rent, what are the rental escalation terms, what is the lock-in from the tenant. Apart from that, they will also get to know other details in terms of what is the micro market, what are the rents going in that building or the micro market. So all these documents are shared with the investors before they invest. Not only that, they also get to know through our financial model that what is the month-on-month payout which will hit into their account for the number of years they wish to remain invested with us. So that is also provided to them. So even before they invest, they know what is the exact amount which will hit their account on a regular basis. In addition to all of this, all the due diligence reports, all the valuation reports, which are also done by third-party agencies, those are also uploaded on the drive, which the investor can check. And after checking, after being satisfied, he can make an investment decision. Also, when he decides to invest, he needs to put only 10% as the token amount or the initial payment. Online, there is an expression of interest form which is generated, and that is also has to be digitally signed by the investor. Once that is signed, once the 10% token is transferred, that is when the investment is confirmed for your investor. Post that, within 20 to 25 days, or probably within 3-4 days before the registration of the asset, the balance 90% funds will be called, and there will be a 7-day notice or 7-day intimation which will be given to investors, within which they will have to deploy that 90%. Once they deploy that 90%, the registration of the asset is done. And once the registration of the asset is done, from the next month itself, the rent starts coming to the SPV, and we transfer it or we send it to the investors on a month-on-month basis. So that is how everything is transparent. Clients know from day one where they're getting into, what they're getting into, post which they can take an investment call.
One question that comes to my mind is, for registration of this fractional property, do they have to visit India, or can they do it sitting in place wherever they are?
So the good part about, and one of the most important reasons why people prefer investing through this platform, is that you do not have to physically step out of your house to invest. You need to sit at your house and invest, take an investment decision when the property has to be registered. As I said, every property is going to be owned by an SPV, which is private limited in nature. The SPV or the trustees will appoint dummy directors or directors who will be doing the registration of the property on behalf of the SPV. They don't have any voting rights. They don't have any share in the property or the account and all of that. It's just that the directors are appointed by the trusteeship companies to ensure that registration happens smoothly on behalf of the SPV, and investors do not need to travel anywhere. Yes, if at any given point of time after making the investment, if they wish to, if they're visiting that place or location or city where they've bought an asset, we can always take them for a site visit if at all they are there. But otherwise, you don't need to visit or travel to any place to invest and register the asset.
During my interaction with you in part 1, you said that investment amount starts from 25 lakhs onwards. Is it blocks of 25 lakhs, or is it 25 lakhs and after that you can bring 30 lakhs, 35 lakhs? Is it each block of 25 lakhs? How does it work?
So the investment amount starts at 25 lakhs, and post which you can invest in multiples of 5 lakhs. So you can invest 30, 35, 40, 45 as well. So the investment amount is very low as under $30,000 for a single asset.
$30,000.
25 lakh INR, depending on the conversion
Approximately rate. It will be $30,000 at today's pricing.
Yes.
Understand. Right. Nihar, you make money by rental collection. Is the rental collection is something which is guaranteed, or there are any questions of if in this? Should the investor think that it is just like I get a bank interest, that is the way I'll get it? Are there points which they have to keep in mind?
No, sir. So unlike a lot of other investments, here there is no speculation which is made. The returns are known on day one. As I said in one of my earlier discussion points, that we do not acquire a property which does not have a lock-in from the tenant, which means that if the tenant has 3 years lock-in, for 3 years, he cannot move out of this property. For 3 years, he needs to pay a fixed amount of rent every month on a fixed date, on or before that date. So the rentals, although they are not guaranteed, but they are officially agreed upon in a legal document which is registered, and it's a leave and license agreement which is done, or lease agreement depending on case to case. So the rentals are fixed and there is no change to it. Yes, there is a change, but that change happens when the rentals are escalating or going upwards, which means increasing from a time-to-time basis. In certain cases, it could be escalation on a year-on-year basis. On certain cases, it is once in 3 years, depending on the agreement which is made. So the rentals are fixed. There is no change to it. There could be an upside once the escalation happens.
So in normal course of time, one need not worry about the cash flows. But like vagaries of anything else, we saw a pandemic, things can spin out of control, companies can go bust. All these problems are there. You cannot say that it is 100% safe, or it's like a government bond. You can't say that. But nevertheless, if we measure the risk, it appears to be something which is manageable and you have a reason or you have an option to control your exposure to single properties or single locations or single sector or single type of asset, thereby you can manage your investment. Is it fair to say that?
So I would like to throw some light on that as well. At this point of time, as we speak, we have disbursed more than 50 crores of rent. There has not been a single default on the rentals out of the 19 assets or properties which we have. And last 3 years, out of the 3 years, 2 years was peak COVID globally. Even during that time, there was not a single rent which was defaulted or which was not paid. And this, we have actual live public document on this. So this could be checked at any given point of time. So what we are trying to say over here is that while things like COVID and all of that could come in as well, but the risks are managed by strata to that extent. At any given point of time, if the tenant is there and if he wants to move out, he has to give us minimum 3 to 6 months notice after the lock-in period, which means in that 3 to 6 months notice, we have enough time to get a replacement tenant as well. And if at all the tenant suddenly decides to move out, then obviously we have the security deposit which we confiscate, and that's all also passed on to our investors. So those kind of risk mitigation steps are already taken and are in place. We have a very strong asset management or asset monitoring team, but apart from that, we have a very strong leasing team as well. So if at all the tenant wishes to move out after 3, 5, 7 years, there is a replacement tenant which is easily available. And mind you, all the tenants which are there on our properties are all known and very well-known names globally, not only India. And hence, we are very strict on what is the kind of tenant profile which we have to understand whether he will move out of this asset soon or he will stick around for a longer time. So that's a part of the due diligence which we do initially before getting the asset on board.
One question that is there in investors' mind is, I will invest my money into this fraction real estate. Is there a lock-in period imposed by strata or the system? Or if I need money, or if I don't like it, or whatever the reason, if I want to exit, is there an exit option? If yes, when? Are there any costs of exit?
So today, when a person decides to invest into a commercial real estate through a fractional investment mode, the minimum lock-in is 12 months, which is 1 year. At any given point of time after 1 year, if you wish to exit, you can exit and you can move out without any questions being asked. However, that is possible. We strongly urge our investors and clients to invest with a minimum 3 to 5 year horizon, because the asset class is such which will give you rental escalation, which will also give you appreciation with time, and it does not happen overnight. So anyone coming with a horizon of less than 3 to 5 years should not be investing into this asset. But at the same time, if you have invested, if there is any emergency, there is an exit available anytime after 1 year. For 1 year, there is no exit. It's a lock-in of 1 year for the investors. How do you exit? So there are 2 or 3 ways how one can exit. The best way is to hold on till the asset is sold by strata, and it's called natural asset sale. So natural sale is the best way where you can make maximum returns. But if at all there is an emergency and if you wish to exit, there is a very strong offline or a secondary market on which the asset or the investment could be sold either fully or partially. And I will explain how that happens. And we've facilitated more than 40 transactions in 3 years by way of secondary or offline sale. Today, when we launch a property, the property is, let's say, worth 50 crores. There is always an oversubscription which happens, and there are 6 to 8 crores worth of investors who are always on the wait list. The minute you want to exit, there are people on the wait list whom strata will reach out to and get them on board to buy the investment or the units which you are exiting. So that is very much possible. However, you can expect a 30 to 60 day or 30 to 90 day kind of a timeline from the time you express interest to sell to eventually getting your money back into your account. So that is that. We also have a very strong resale platform which we are working on, which means you will be able to buy and sell online. You are anyways buying online, but you can sell online through our resale platform as and when you wish to. So that is also going to be live in this particular year.
Nihar, I heard you, and you have clearly explained the benefits to the investor. But you stand on the side of strata, and for strata, this is a business. Where do you make money from? How do you make it into a profitable business? Do you charge a fee? Do you charge a commission? You take a particular cut? from the rentals or the capital appreciation that happens for the investors, how does your business model is revolving around fractional real estate?
So we believe in a win-win situation. We do not want to make money or earn fees at the cost of anyone else's investment. Hence, there is a two fees kind of an approach which we have. First, we charge a management fee, which is fixed 1% of your original investment amount, which means if you invest 25 lakhs, we will charge 25,000 to manage the entire asset throughout the life cycle of the asset, acquiring the asset, managing, and eventually exiting. Even if your 25 lakhs becomes 30, 35, 40 lakhs, we still continue to charge 1% only on your original investment amount. Also, what we've introduced is a loyalty benefit program for our clients, which means that today when you invest 1 crore, your management fee reduces from 1% to 0.9, which is 90 bips. The minute you touch 3 crores individually or within your family or company, you will be on a management fee of 80 bips. And the minute you touch 5 crores, you pay only 70 bips. So we are passing on that benefit to you as a loyal investor. When the asset is sold, only if the investor makes 10% IRR per year, which means 10% return per year, we will charge a profit sharing fee anywhere beyond 10%. Just to give you an example, if the total return which is made or IRR which is made by an investor into a particular investment option is 13%, we will charge a performance fee of 20% only on the incremental return above 10%, which means 13 minus 10, 10% goes to our investors. On the 3% is what we charge a performance fee, which is 20% of that 3%, which is 0.6. So net out of that 13%, 10 plus another 2.4, which is 12.4 goes to our investors, and 0.6 is what Strata takes. The reason why we are doing this and we are not charging this performance fee or anything upfront is we want to ensure that we've got a good deal or good investment option for our investors. We will give them an exit at a good price, at a good valuation, at a good IRR. Only if our investors have made good money, we will make our profit. So that is very clear, and this is all mentioned in the asset management agreement which your investors or which the investors will sign before they invest or start investing with us. So everything, all the fees and charges are clearly mentioned. And also that is something which we do on a regular basis.
You don't take anything out of the rentals that are coming your way. Rentals are completely the ones which are passed on to your customers.
Absolutely. There's nothing which we take from the rental, but yes, we charge a 1% management fee. So if 100 rupees are paid on a month-on-month basis as rent, for example, on a yearly basis, 1 rupee comes to us, 99 rupees goes to the investors.
So 1% of the rentals will come to for the management purpose.
No, sorry. So 1% not of the rentals, but let's say that eventually comes as 1% of your investment amount.
Nihar, you said 1% of the invested value. Is it one time or is it every year?
So management fee is charged every year. So 1% of the original investment amount per year is what is charged. However, we do not charge that 1% together in the first month or the last month. There is a proportionate charge which happens across the 12 months. But the amount which is paid is or charged is 1% of your original investment amount per year. That is, if your investment is up to 99 lakhs, the minute you touch 1 crore, that goes down and then it further goes down.
Dear viewers, I would like to add a disclaimer here. Like in any other asset class, when you're investing in fractional real estate, you need to be making your due diligence. All the points that you need to be knowing, from my experience, we have covered it here. Nevertheless, please take the opinion of a chartered accountant with respect to your taxation. Look at the documents, whatever the details you are looking for, consult your financial planner, check your risk profile, and fix up how much of an exposure control you should keep towards this activity. When you have done all these parts, then you are ready for investment into the fractional real estate. I only wish you do your due diligence and investment into fractional real estate become one of the finest investment opportunities what NRI Money Clinic has given you from its offer of services. Nihar, thank you very much for your time, and you have taken efforts to explain a topic which is as new as fractional real estate. I am very sure the audience will make best use of this. They will still have many questions. They'll have many doubts. I keep calling you at frequent intervals of time. Please take your time and help my audience to create a very good impression of fractional real estate as a good investment vehicle. Thank you again for your time and efforts here.
Absolutely, sir. I think it has been an honor to be on, NRI Money Clinic shows, and we're more than happy to be associated with you and always present and available for you and your investors at any given point of time. Thank you for sharing this platform with us.
Dear viewers, hope the part 1 and part 2 series of fractional real estate gave you a deep insight into the opportunities in the fractional real estate. If it did answer your questions that could be there in your mind, please do like this video. If you are a person who is watching my channel for the first time, please press the subscribe button and press the bell icon. Don't forget to share this video with your near and dear ones. Thank you very much for watching this episode on NRI Money Clinic. I shall be back with you next Tuesday with yet another expert in yet another topic. Till then, stay safe.
Press the bell icon for more details and subscribe our channel.